Welcome back to the deep dive. Now, if you're like us, you know the prepared opening remarks on these big financial calls. They mostly tell you what already happened.
Exactly. Glossy numbers, past performance.
But the real gold, the stuff about the future strategy, where they're putting their money, what keeps them up at night, how they plan to win, that's almost always buried in the Q&A.
That's absolutely right. It's when analysts push them, that's when you see the real thinking. And today, our mission is to dig into those strategic nuggets from a very recent, very revealing Q&A session. It's quite a story of managing a big transition.
Yeah, and we've pulled out three really big themes that kept coming up in the questions. First, this huge, almost aggressive bet on the future, agentic commerce and AI.
A major focus.
Second, the stuff that's actually accelerating right now, the growth engines like buy now, pay later, and Venmo. There was real excitement there in the answers.
You could hear it. Tangible momentum.
And finally, how they're trying to balance these big long-term plays against some, pretty significant short-term headwinds hitting their main business.
It paints a really clear picture of their path forward, even if, as they admitted, parts of that path might be expensive near term.
Okay, let's dive in. Starting with that biggest strategic gamble, agentic commerce. We heard about it at Money 2020. Now these huge partnerships, OpenAI, Perplexity, Google. But why do they think, when analysts asked, that they have the right to win here? This is new territory.
Well, what came across strongly in their answers is how they're positioning themselves, not as another AI trying to do commerce, but as the essential plumbing for AI-driven commerce. They're solving the integration nightmare, basically.
Okay.
And that strategy, as they laid it out, kind of rests on three pillars.
Right, let's take the merchants first. How does this help businesses, the ones actually selling stuff?
So the merchant angle is all about efficiency. Think
Yeah.
about it. A merchant, whether they're huge or tiny, they just don't have the resources, the tech teams, the time to individually plug into every single large language model that pops up. It's just not scalable. So PayPal's new agentic commerce services, as they called it, lets merchants integrate once with PayPal. And then PayPal handles orchestrating all the necessary bits, identity, authentication, fraud checks, seller protection, across all the different LLM platforms.
Hold on, isn't coordinating identity and security across, every LLM, a massive technical challenge?
Yeah.
And a security one. How can they be so sure they can handle that kind of complexity?
Well, that's sort of their core argument, right? That managing identity, security, trust, that's their bread and butter. They've spent decades building that infrastructure for millions and millions of users. They feel they already have the trusted rails built.
I see.
The LLMs need the commerce function. Merchants need that single integration point. PayPal sits in the middle.
Got it. So they aim to be the central utility, the trusted layer for AI commerce. Okay, what about the consumer side? What's the benefit for you and me?
For consumers, it really leans on the trust they've already built with the wallet. The idea is you get that same trust, safety, buyer protection, no matter which AI or LLM you happen to be interacting with. And crucially, it's not just about the payment itself. It extends to post-purchase stuff, to tracking packages, handling customer service, returns. It's meant to be the whole end-to-end commerce journey facilitated safely.
Right, makes sense.
Yeah.
And then the third pillar, the LLMs themselves. Why would giants like Google or OpenAI really need this? Don't they have immense resources?
They do, but what they don't have is instant access to a ready-made global commerce ecosystem, building out connections to tens of millions of merchants worldwide, from the biggest names down to the smallest shops, what the management called the head, torso, and tail that takes years, maybe a decade.
True.
This partnership gives LLMs that instant global scale for commerce. It avoids a massive infrastructure build-out for them.
Okay, and this is where the Q&A got really interesting financially. Analysts definitely pushed on the cost of all this, the product development, the tech, the co-marketing deals. And the company was pretty direct.
They were.
The CFO explicitly said these investments are likely to be a, quote, near-term headwind to how fast their transaction margin dollars grow next year in 2026. This isn't just a small experiment.
No, it's a massive signal. They're basically saying, look, winning this future state, this agentic commerce world, is more important than maximizing next year's earnings numbers. It's a long-term play, and they're willing to invest heavily now.
It feels like a real burn the ships moment strategically.
I think that's a fair way to put it. They see a fundamental shift happening and are determined to lead it.
Okay, let's shift gears, away from the future bet, towards the things driving growth today. The Q&A highlighted real acceleration in buy now, pay later, and Venmo. Let's start with BNPL. Seems like it's really hitting its stride.
Oh, absolutely. It's clearly moved way beyond being just a niche product. Management used terms like a tectonic move in consumer finance. The numbers back it up. TPV, the total payment volume, keeps growing over 20% consistently. They're heading towards something like $40 billion in BNPL volume in 2025.
And the user engagement sounds incredible. They mentioned monthly active accounts up 21% and a global net promoter score of 80. An NPS of 80 is just stratospheric for financial services.
Yeah.
What's driving that satisfaction?
A lot of it seems tied to the strategic shift they talked about moving BNPL upstream in the shopping process. It used to feel like an option you saw only at the very end, at checkout.
Right.
Now they're actively marketing it earlier, presenting it as a way to shop, giving consumers more confidence and flexibility before they even add things to their cart. So it's becoming less of a payment method and more of a customer acquisition tool.
And they're spreading it everywhere, aren't they?
Yeah.
In countries like Canada, longer payment terms in Italy and Spain, plus bringing it into physical stores in the U.S. via the app.
Exactly. Omnichannel is key. And for you, the listener, probably the most vital bit is what they called the halo effect. Using BNPL isn't just about that one transaction. Their data shows it drives significantly more engagement overall. People using BNPL end up using their main branded checkout 30% to 40% more. It creates real stickiness across their whole platform.
30 to 40% uplift. That's,
Yeah.
wow. Okay, now Venmo. That also seemed like a real bright spot in the Q&A, showing a definite shift beyond just sending money to friends.
Yeah, the numbers show Venmo's maturing into a broader financial tool. TPV growth accelerated, up 14% in Q3 from 12% in Q2, revenues pacing towards $1.7 billion this year, and monthly active accounts hit nearly 66 million, up 7% year over year.
But the big story there, listening to the answers, seemed to be the potential for monetization, right? The average revenue per user, ARPA, is still quite low overall.
Precisely, because while, something like 90% of users are still just using it for P2P, only a small fraction, maybe 5% to 10%, are using the Venmo debit card or the Pay with Venmo feature for purchases.
That's where the money is.
Exactly. They shared a fascinating stat. For the users who are engaged across P2P, the debit card, and Pay with Venmo, the ARPA is about 4 times higher than the average user. 4 times.
And wait, it gets better. If those users also bring money in via direct deposit, the ARPA jumps to 6 times higher.
6 times. Okay, so that really tells the story. It's not just about getting more users, it's about getting existing users to do more things within Venmo. That built partnership for splitting rent seems like a perfect example, a high-value social use case.
Absolutely. They're clearly focused on layering in these new use cases, methodically turning that huge, engaged social base into a much more deeply integrated financial platform.
So we've got the big future bet with agentic commerce and the current growth drivers accelerating with BNPL and Venmo. But the Q&A wasn't all rosy. They definitely had to address the headwinds facing the core branded checkout business.
Right. You can't ignore the scale of that core business. Branded checkout TPV grew 5% currency neutral, which is solid, and the U.S. portion actually accelerated to 10%. But management was candid about seeing some macro-related softness.
Starting when?
They pinpointed late September, continuing into October, seeing some deceleration, particularly in the U.S. and Europe. And just to be clear, listening to their explanation, it wasn't fewer people buying things, right?
No, that's key.
Yeah.
Transaction volume held up reasonably well. The issue was the value of those transactions. The basket sizes, the average order value started shrinking. People are being more cautious, pulling back on discretionary spending.
Okay, and that's why their Q4 guidance is a little bit cautious.
Exactly. They said the guidance assumes that macro pressure continues, resulting in a lower growth rate than they saw in Q3. Plus, they're lapping some strong spending from last year.
So, given they can't just flip a switch on the global economy, what levers can they pull? The Q&A touched on this.
Yeah, the focus shifts intensely to things they can control, primarily conversion rates, making the checkout experience absolutely frictionless.
Right.
They highlighted progress there. The redesigned checkout flow, especially when combined with biometrics and passkeys for super fast authentication, is showing conversion improvements of 2 to 5 percentage points in their testing.
2 to 5 points is significant at their scale.
It is. Rolling that out globally is their main defense against the macro pressures right now, improving the performance of the existing traffic.
Okay, switching slightly to the financial framework, a confirmation of starting a dividend that felt like a big statement in the Q&A.
A very big statement. It signals confidence in their cash flow and a commitment to shareholder returns. They confirmed it'll be based on a 10% payout ratio of net income.
and that's alongside the existing buyback program.
Correct. That dividend complements the share buybacks, which still target returning 70% to 80% of free cash flow. So it's disciplined capital allocation, returning significant cash while still funding those big growth bets we talked about.
But maybe the most telling part of the whole Q&A, beyond any single number, was the overall mindset conveyed by the leadership, particularly the CEO.
I agree. He framed the current environment as facing, I think he said, 3 pretty significant generational shifts: digital wallets, BNPL, and this new wave of agentic commerce.
And their posture towards these shifts.
Unequivocally offensive. They repeatedly said they will invest appropriately to win these shifts, fully acknowledging, again, those near-term headwinds in 2026. The message was clear. Long-term leadership trumps short-term earnings optimization right now. They see this as a pivotal moment.
So wrapping this all up, what's the key takeaway for you, our listener, from this deep dive into the Q&A? It really confirms this company is navigating a massive and frankly expensive transformation.
Yeah.
Moving from just online payments towards being a broader commerce platform.
Yeah, a transformation defined by really bold bets on AI and agentic commerce, fueled by the current acceleration in BNPL and Venmo, all while managing these cyclical economic pressures.
They're definitely betting big on where they think the world is going and accepting the near-term costs.
Absolutely.
Which brings us to maybe the most interesting tension, the final thought for you to ponder. It's that trade-off itself. Management is broadcasting very clearly that winning these generational shifts is worth potentially slower growth or margin pressure in 2026. The big question is timing, isn't it?
It really is.
How quickly will the payoff from these long-term investments, especially something like agentic commerce, which needs time to build, become significant enough to offset the current squeeze on the core business from the economy? Getting that timing right will likely define their success over the next few years.
A fascinating dynamic to watch, and definitely something we'll keep tracking here on the Deep Dive.
Thanks for joining us for the deep dive. We'll catch you next time.